Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first and only global virtual incubator and accelerator in the world. And our mission is to help 1 million entrepreneurs reach $1 million in annual revenue and beyond, build $1 trillion in global GDP and 10 million jobs. We do a variety of different things in support of this mission. These roundtables are one of our cornerstone offerings, and we've been doing them for a long time, actually long before the 1M1M program came about. These roundtables were our first experiments, first forays into doing some scalable entrepreneurship development work. 259 sessions today, so it's been going on for a while. We've had over 30,000 people, or close to 30,000 people, I think, who have attended these sessions. And you will have a recording available afterwards. If you're live tweeting the show, please use hashtag 1M1M. Our Twitter handles are @1Mby1M and @Romana. And the roundtable recordings will be available at 1M1M Roundtables channel on YouTube and also on the blog. So I'm sure you will be able to visit that later or share it. These are the call-in instructions. We are not quite ready for call-in yet. I will put these numbers up again later on when we are ready for call-in, but meanwhile you can start thinking about what questions you want to ask. As you observe the session unfold, you can make notes of what questions come to your mind, and we will try to address them when we are ready for Q&A. All right, so this is a continued celebration of my latest Entrepreneur Journeys book, $1 Billion Unicorns. The book came out in January, and we have had special guests in these sessions talking about unicorns, people who are either have built unicorn companies or are in the process of trying to build unicorn companies, unicorns being defined as billion-dollar valuation companies. So in any case, you can look at the book. It has about 17 case studies of unicorn companies. And by the way, let me just make one caveat here. We do not really highlight as much valuation without revenue billion-dollar unicorns. We focus on unicorns that generate actual revenue, and the valuation is more revenue-based as opposed to smoke and mirrors. So that's one of the things that I'm very sensitive about, I would say. So if you go to the blog, actually, I wrote a piece yesterday called "The Funny Money Business of Unicorns," and you should take a look at it. There's there are some big subtle issues with building unicorn valuations artificially that entrepreneurs should know about. So let me welcome Amit Gupta, co-founder of InMobi, as our special guest for today's show. Amit, you have built one of the first breakout companies out of India, breakout technology companies out of India. Congratulations and welcome to the show.
Thank you, Sharmana. Thank you very much for this session, inviting me and giving opportunity to speak with fellow entrepreneurs. I'm very excited about that.
So tell us about what you're doing and where you are in your quest to become one of the first billion-dollar unicorn companies that have gone global out of India.
So sitting today, we have actually reached a significant scale, and I'm sure that even your definition of scale and revenue will call us a unicorn. So as a So, I don't know what is the next stage, what someone should aspire for after becoming a unicorn, but certainly as a company, we have grown quite a lot, around 950 people, over 18 offices. We have a reach of 1 billion unique devices on our network on a monthly basis, which is third largest after Google and Facebook. So we believe, this is a very, very unique opportunity we have created, we have gone after, which is truly global in nature. Unlike in the past when companies used to say, hey, I'm going global, So maybe their definition of global was 1 or 2 or 3 country maximum. But look at what mobile internet ecosystem has provided. There's a backbone. Literally, mobile phones are being used in so many countries. And one, if really look after this opportunity from a right lens, lead with a technology and product, someone can create a global business running in like more than 50 or 60 countries very, very easily.
Amit, let's actually, I'm sure our audience is going to find it inspiring to hear a little bit of the beginning of your journey. What was the thesis that you went to market with, and what was the process of hitting upon or identifying this opportunity that had the global potential or became, a global potential business? Tell us a bit about the beginning story.
Sure. I think our story in the beginning has a lot of fun element and lot of anti-fun element where there are like moments where things are not working out. So let me touch upon some of those stories. So certainly one thing was very, very clear when we started. So we started this company in India, in Mumbai to be precise. And one thing was very, very clear when we started seeing mobile devices in the hand of normal people. Like really people were spending their month's worth salary in buying mobile devices. We understood that there's something big about it. And that point of time, even India had a good user base of 400 to 500 million devices. Although, we thought that there's an SMS as a business model, which we should go after. So we thought mobile is a big, big opportunity, something should be done and something can be done to create a huge business model. And at that point of time, we were fascinated with SMS as a form factor because we thought everyone can read and send SMS. So our first product was to do advertising when someone is sending a query to a short code. Those days, if you remember, India Times used to have 8888, where you send news to their number, you will get the top 2 or 3 news. And there was a cricket, there was a Bollywood, and a bunch of these things. And what happened? While we got the product made, we got the partnerships made, and actually one thing I didn't cover, when we were basically partnering with India Times and Radio for NDTV, the value proposition was that, when someone is requesting for a weather or a cricket score, you will send weather and cricket score, but you'll also send advertisement, and hence you make money, extra money in this process. And those advertisements, we got our own team to go after 20,000 small and medium-sized shopkeepers in Mumbai. And out of those 20,000 shopkeepers, 3,000 of them said, okay, you know what, this is my ad. Your idea looks amazing. So not only that point of time, out of 20,000, 3,000 shopkeepers saying that, okay, you take this money and I want to do ads. It was very, I think, good sign for us. But what happened as we progressed into the business, we found out that the effectiveness of that medium was not very high. And very soon we realized that SMS is actually not going to work. And it became, such a embarrassing moment for us when we used to say, hey, we are doing this mobile advertising business, and they used to say, oh, you are the company who's sending me those annoying text messages. So this was actually one day we said, no, this is actually certainly not the right business we guys are in. So we kind of pivoted the business from SMS-led monetization or SMS-based advertisement to more of a mobile internet-based monetization. And even that journey was not very easy because those days there used to be feature phone running on 2G, 1.5G network, small little screens, and it used to take a lot of time for us to convince others that people are using internet on mobile phones. But guess what? When we were going to some of the customers and showing them results, they were certainly happier with respect to the performance they were getting on SMS. So we understood that this is probably the form factor which will basically take us forward. And it was much more global phenomena. The same technology was relevant for different markets. Unlike in the SMS business where we had to work with telcos, it was not scaling up very, very well. And this is where we basically, kind of pivoted the business from SMS to mobile internet. And in this entire transition, we had near-death experience faced by the company where we literally have no money. We were running the company on credit cards, personal credit cards for almost 3 to 4 months. But most of us believe that what we are doing is actually very valuable, and we will basically see someday light at the end of the tunnel. And that's exactly happened. We started trying to raise funds after angel funding, and that most of the money we blew up in our first business model. And when we pivoted, we needed more money. So as I said, we use our credit cards, and then found Ram Shriram and Kleiner Perkins, who got excited about our vision and our passion, what we wanted to do.
So what year did you start InMobi? This evolution of...
It was 2007. It was 2007, and almost for an entire 1 year, it was the first business model, and towards end of 2007, we pivoted to the new model, which we are continuing even today.
And your first pivot, still you were focusing on India, and India was still largely feature phones, right?
True.
So what was today, of course, we live in this smartphone universe, at least many of us do. We don't even think about what a feature phone experience would be like. But at that point, your world was mostly feature phone advertising, yes?
Yeah, it was only feature phone, because there was no iPhone launch, there was certainly no Android. But there was a belief that this will happen.
How were you delivering the ads on feature phones, given that there were no apps? Today, we see ads in apps mostly. Yeah.
So even in the feature phone, Sramana, you might not be knowing, there was a technology called Symbian and J2ME, and they used to have apps, although those apps were not sophisticated. And but at the same time, most of the business during those days used to come from browser-led engagement rather than app-led engagement. So yeah, there were apps, but they were not big for us. We used to make a lot of money from browser-led engagement.
So Amit, when did it hit you? So was it that meeting with Ram Shriram when it hit you that you were upon something big?
So that was certainly one of the endorsements, but even before that, and for that matter, to excite Ram and his partners at Kleiner Perkins, or friends at Kleiner Perkins, we started seeing numbers in a very hockey stick manner, and we have never expected that we will be able to grow the business like this. And we started understanding the whole network effect, which were trying to help us in growing our business. So our whole business is like eBay, where you have demand and supply, and when they are really working together in a reasonably good manner, you basically grow in a reasonably no time. And we noticed that phenomena pretty early in the game, literally after launching after 2 months. We started seeing how the advertisers and publishers are coming together, and they are creating that network effect, and this business basically can grow pretty fast. And the fact that we were riding on a strong technology, so for us, launching our same business from India to other countries was also reasonably easier, and this started showing that growth of the hockey stick, and we understood that there's something very big, very interesting, which we have got in our hand.
So now you didn't follow the strategy that most Indian startups are following to go global, of coming to the US. You followed a different global market penetration strategy. Talk to us about that.
Sure. So, and I think this is certainly a case study which will be talked or should be talked about. It was a very, very, very different and difficult decision or very US side is not a very conventional decision which people have taken. It was very usual practice that if you are sitting in India, yeah, you do something in India, but India always had an issue of not having a big enough domestic market. So people will look up to US, look up to Europe for the natural business extension. And even for us, it was the most obvious next market after India because of English language, because of our educational, professional roots over there. Most of us have lived, worked, and studied here, and it was the natural choice. But you know what? We really looked at the market, and mind you, back then, 2007, 2008, US was not a big mobile market. Their technology was running years, before then what was happening in Asia, or for that matter even Europe. Mobile phone was used to just collect the voicemail, and that was the only use case. There was no iPhone, there was no Android at that point of time. But at the same time, there were a lot of companies who were trying to do something with mobile advertising, and some VC money, some big companies, and we saw that, hey, market is going to be interesting, we understand that, but probably that's not the best time for us to enter there for multiple reasons. First of all, there are too many players fighting for market when market is not large enough. Second thing, we realized that yes, we understand US, but guess what, if you have to set up a office, people, sales force, it is going to cost a lot of money. So rather than we basically spending on sales and trying to fight with a very small baby market, we decided to spend all of that money on technology and looked for the markets which were very similar to India. And that's why the next market we entered was Indonesia. Indonesia was very similar to India, same feature phones, same type of advertisers and publishers. So whatever we have built in terms of the product platform, we were able to translate for that market in matter of couple of weeks. Yeah. Second thing was, we did not have to hire a sales team in that market because Indonesia was a flying distance from India. So someone will go spend a week and come back. And that process became another level of efficiency because we were trying to learn a lot of things. And I'm sure you have seen so many companies trying to open a lot of remote offices. First of all, it's very difficult for you to find the right guy if the scale is not there. And then, there's a training, there's a technology, there's a cultural alignment, a lot of things which are also very, very tricky. So we kind of cut down all of those operational headache, and then post that Indonesia, and the same model we ran South Africa, Nigeria, Kenya. We went to Thailand, Malaysia, and we basically started seeing those trends where we were able to ride on the similarity of the customers on both sides, advertisers and publishers, riding on the same platform. And there was an interesting phase in our life where we were like, okay, we know how to do emerging markets. And by the way, this particular process, we not only kind of beat the incumbents who were basically running in that market, but also at that point of time there was a company called AdMob, which was later acquired by Google. So we used to compete with them. But what was happening, just because of our superior and very focused execution, and everyone used to shift the business to us. So we were really started beating the incumbents, local players as well as global players like AdMob with that level of focused execution. So that worked really, really well. And that gave us a good reasonable scale in terms of revenue, volume, and lot of interesting things. And I was telling you, in our business, the network effects are very, very crucial. And once you get that, it helps you significantly. And post that, there was interesting thing happen, when we did all of those emerging markets, we said, you know what, yeah, this is cool, but what next? So Europe sounds cool, this big market, should we look at Europe? And we had a fear. We had a fear that, probably we were lucky and we were just be successful in the markets, which probably did not matter much. We went on a trip, so Naveen and I basically went on a trip to UK and Germany, for week each. And even there we realized that most of the companies who are local companies, they are running either on relationship or they are just being lucky, and no one had any reasonably a good technology. And we thought that, you know what, oh my God, we have far superior product, and if we can enter here with the right team, we will again capture the market. So we decided to invest into that region. We hired a very senior person from Google and made him the regional MD. And then he built a team under him, and we again started executing and getting business in our favor. And post that, we never stopped. We launched our business in Korea, China, Japan, Australia, and kind of really swapped the market in our favor. And 3 years ago, we launched into US market in a full-fledged manner as a last market for us.
Now, at what point did you make that move from the emerging markets to the European markets? What was your revenue level, and what year was that?
So the year was 2009, somewhere middle of 2009. And although numbers are not disclosed, but numbers started to become interesting enough. It was, I think, in double-digit $1 million, double-digit $1 million. But more importantly, you always have a leap of faith, and you see some leading indicators for that conviction to happen.
The question I was going towards, actually, this is why I wanted the marker for the year, is now this, in 2009, the European market is starting to be largely a smartphone market, right? iPhone has started penetrating, and the competitors are starting. So your product needed to take that into account, yes?
Very true, very true. I think bang on. So for a good portion of time, this whole transformation of smartphone to feature phone. So US was literally, they were never into mobile internet arena, like honestly speaking. So for them, when iPhone came into the market, they saw a sudden jump of iPhone, and then they became a smartphone driven economy. But as far as Europe was concerned, they had a much slower rate of adoption of smartphones, and we did have some time to manage with this transition. And we were again into heck of things. 2009 was a time when we also launched our offerings supporting an iOS and Android in the subsequent year. So yes, we did have time because we had a large business of Asia and Africa, and we were supporting businesses on the feature phone. And just because we were not running business in US, we had a little bit extra time of 6 months to manage it for Europe. And we incidentally did that. And sitting today, revenue from feature phone is probably less than 1%, or may not be even there. None of us even bother about that. Most of the revenue comes from Android and iOS.
And so however, in the emerging markets, the smartphones are not fully penetrated yet though, right? Or is it that the revenue numbers are so low from the feature phone emerging markets that the smartphone market has totally taken over the revenue?
True. So this is actually, you have made the correct statement. The advertising market in, let's say, emerging markets like India, Indonesia, they're not very big. So it is demand constrained in some manner. So whatever smartphone, user base we have got, they take up preference of getting the dollars first versus the feature phone. So feature phone is like kind of a slow death from our mobile advertising perspective. So I'm not saying people are not using feature phone, I will be wrong. But one thing for sure, that if I have $100 to spend as an advertiser, I will be spending on the smartphone.
Okay. So sounds like you are probably ready to go out and become a public company in relatively short order. And I understand that the public market is gyrating. As far as your segment is concerned, the public market is not looking so great right now. Can you offer some analysis of that?
Sure. So it depends on, how one perceives InMobi. if one perceives InMobi as let's say some of our previous competitors in the name of Millennial Media, JumpTab, Welty, all of those guys who claim to be in business of mobile advertising and ad network, yes, it will be a very horrible state to be in, a not too good state to be in. But what InMobi has done after SoftBank investment, we have invested a significant amount of that money which we raised from them, $200 million to be precise, into building next generation technology. We acquired 5 companies, invested into our own engineering force, and what we have built is not what used to be the case in the past. And our peer group in the past didn't get that opportunity to build the next generation technology platform which InMobi has been able to build. So I think right comparison for InMobi in terms of the strength may not be the size is Google and Facebook, who are known to be a powerhouse of technology, and they are not being beaten by the Wall Street at all. Like there's a very bullish outlook on Google or Facebook, for that matter Twitter, where their business is also getting powered by some core technology, and their business model is also advertising. Just to let you know, Facebook last quarter revenue number, 70% of their revenue came from mobile, which was powered by some technology.
Yes, so I cover Facebook, and I know Facebook's mobile advertising numbers are fantastic.
Yeah.
There's a slight difference though. Facebook has identity and huge amounts of personalization capability which they have woven into their technology, their ability to serve ads. How do you compete with that?
So, and that's the unknown part. Any company of scale and might has to do that. So even for InMobi, I was telling you that we see 1 billion devices on our network every day. So difference between maybe InMobi and Facebook is Facebook will know that, okay, this is Salmana's phone. In InMobi, you will be tagged as some unique ID, some number. And we see you through 30,000 apps which have partnered with us. So when you basically go and read news on WSJ or Play Angry Bird or a bunch of these publishers, if they are one of our partners, we actually get to know some information about you. And how it happens? Because they have taken our SDK. SDK is nothing but a piece of code which tells me, okay, this request for ad is coming from this device. And now we have created, imagine a large, massive Excel sheet which has got 1 billion rows and tens of thousands of columns, where I have been able to record every interaction which your device has made with my network. And now we also partner with publishers and advertisers, take some of the data about you, which is once again not PII, because we never take personally identified information, which is your phone number, email, or name, because we don't need it. And we also go and work with third-party data providers who tell a little bit more about that particular data. So for example, a lat-long location probably is not a big deal, but someone tells, oh, this lat-long is equal to Stanford Mall, then it becomes very powerful. And now we have kind of deployed a team of data scientists, some machine learning on top of this data to understand more about you, more about that device. And using that data, we are also able to predict some of the intent as well. And this is what Facebook, Google, for that matter, and Twitter, all of this is around that. The reason Verizon has bought AOL day before yesterday, because Verizon is saying, I have the data about the consumer, and if I can club a right media, which is AOL's video, they can create that magic. So InMobi has got access to that data, which is fairly interesting and relevant in the context of advertising. And only difference, as I said, is yes, Facebook will have maybe 5 more data information about you, and they do know your name. I do not know your name. But I believe that with user privacy concern, etc., we are better off versus them, because that data can be misused and there will be a lot of privacy hue and cry.
Well, whether or not, that's not clear yet. At this point, they have an advantage, but you have made a very...
No, they do. That's why, So don't get me wrong. I think they absolutely do there. That's why the numbers are, and a huge respect for whatever they have built. But the point is, the market is very, very large. While, Google and Facebook put together, they get close to 30% of the users' engagement time. But guess what? There are 1 million other apps which are also up there, and these guys come to us. So for Google and Facebook engagement, yes, advertisers will come and talk to you as a consumer, but what about million plus other apps? If they have to catch you on those apps, then they come to InMobi. So it's like, it's a word where, this is not just like, oh, you will see ad only on TV or only on CNN as a channel. You will be seeing ad on other channels or other medias as well. Yeah. So this is basically the kind of summary. But Facebook and Google, these guys are here. They've invested into this engine, and I believe they should be getting the goodness out of that. And same thing in InMobi. Like, we also have interesting stuff built in, and we will get our fair share.
Amit, I know you have a meeting. This was a fascinating discussion. I hope everyone enjoyed it. And we will talk again, I'm sure. Please come back and talk to us more.
Absolutely. Thank you very much. Pleasure talking to you. And, certainly we should catch up. And I would love to exchange notes about something under the hood, what's happening, what's going to happen in next 6 months. Like, some really amazing stuff. You will be blown away.
I look forward to it. Folks,
absolutely.
Thank you, Amit.
Thank you very much. You have a pleasure. Great day. Bye-bye.
Bye. We're going to talk to Kamesh Venkata next. We're going to switch to the mentoring session of the program today. Kamesh Venkata from Hyderabad, India is our first presenter. Could you please unmute your line, Venkat?
Yeah. Hi, Samana. Good morning.
All right. Go ahead. Good morning.
Hi. Are you able to hear me?
I can hear you, yes. I think everybody can hear you, more or less.
Yeah. Thank you. Hi. So I'm Kamesh Venkata. I'm from Hyderabad. So I started working on one of my startups now. It's been just 15 days back I started on this, and it's evolving in the thought process. Samana, can you move to the next slide?
Yes.
Yes. So it's called Xenia Box. Xenia is a Greek god who is like the one or the symbol for the gifting, the one what you give to people. So it's a symbol for that. So it's a Greek god name. So Xenia Box, it's a mobile app to celebrate life and spread happiness. So the next slide, please. Yep. So this is one pain what I identified, a general question. Whenever we try to buy a gift to someone, though we have noticed a week or a month prior, we do a last minute shopping when it comes to gift. We don't plan it in well advance, and we do it. So this is one human psychology which everyone has, most of them have it, and even I have it more. So this is like gifting industry is not streamlined much, and we humans do a last minute shopping a lot. And even the e-commerce companies can't deliver the gifts at the last moment. And then what are the gifting options available today in the market are more of tangible items and less of experiences. So we're come with the thought process of this now. So what we wanted to do is we wanted to have a mobile app wherein we would be giving a catalog of gifting experiences. So these gifting experiences are already existing in India as well as in the developed countries like US and UK, and as well as in Australia and Singapore. But the only problem what I found was these gifts are for like of the luxury kind of things, which are of very, very high amounts and which would be gifted at only once in a lifetime kind of things. Like once in life moments. But what we wanted to do is we wanted to come up with something called gifting the things for even a small celebrations. Like, say, if my nephew has graduated from a college, I wanted to gift her, say, a Starbucks coffee coupon, for which I can't run here and there searching for this. And moreover, the other thing is we are not very sure what attributes. So these are the two what we have in the gifting part. Can you move to the next slide, please? So, and this is my thought process. So, m-commerce cross-platform app to provide a catalog of ranging from low to high, and then this is an in-house social media. So in-house social, not like we are going to use a Facebook login and do it. The reason behind this is Facebook, though we have a Facebook social media app, now today Facebook has moved from a person level interaction to content engagement. So it's more on content. It's more looking at the content part. So it has become a very cluttered part here. So what we wanted to do is we wanted to remove all that clutter. There would be no share option. It's only like you're going to log your life movement. You have done something. Today I've done my 1M by 1M online pitch, which I can share it with my loved ones. So I can just put it on in my social media app saying that I've completed this successfully, a 1 million by 1 million pitch today. And then I can expect gifts for few of the life moments, which would be e-delivered because it's all experiences, which would be like a gift coupons or gift cards, which would be delivered via app, and it could be redeemed from here at the vendors with whom we tie up. So the target customers are those who all have the heart to gift others. So these are our main target customers, and it would be ranging from the age of 18 to say something like 70 years also. So these people who are tech savvy and who like to give experience as a gift, they can be part of the customers thing. Can you move to the next slide? Yep. So what is the target to achieve? I'm not very sure on the demographics of other countries, but especially when coming to India, I do find that people won't gift experiences to others. Two reasons. One is that the giver who is doing the gift is not sure whether how would the person taking it, the recipient would take it. But what I have studied in one of the papers published by 1Mby school is that, yes, the givers are uncertain, but the recipients are happy for taking a gift of experience gifting because it's more emotionally connected. Once it's a material gift, it would stay in your mind, say for some time, but then again you forget it. But coming to the experience gifting, once it comes up, when you enjoy that emotion, when it takes its thing, then it's going to live it for a long time in you. It's going to last for a long time. So what we want to do is we want to create an ecosystem for life moments and gifting. We would like to expand the market for this. And the main important thing, we would like to inculcate the culture of celebrating life moments and giving experience gifts to others. And also provide a catalog of work-field to users. These are the main criteria what we would like to achieve.
I'm going to stop you for a moment and make a few points here. The first thing that strikes me is that, you know, on Facebook, we have many friends. Facebook lets you have up to 5,000 friends, right, each. And now if you look at your thought process, nobody actually is going to be in a mental set to want to give gifts to 5,000 people. There are probably, you know, 10, 20, outside limit, maybe 50 people in our lives whom we actually give gifts to.
True.
So what you're talking about is a much more constrained, if you call it social network or just an app with social sharing capabilities, it's a much more constrained network for each of us. Then the next observation I have is, number one, the next observation I have is that you're talking about experiential gifting, something that is memorable, and then you're talking about Starbucks coupons. That's not memorable. Starbucks coupon is not memorable.
True, yes.
So you better really think about what is an experiential gift that will be memorable and that can be delivered in this mode. Because it's not clear to me what you're talking about. What is the experience? What are the examples of experiences that you can give in this mode?
Okay.
If that is not a physical product.
Yes. Okay. Got you. So the thing is that in case if I need to be more clarity, I need to have put more clarity in the slide. So like apart from the experience gifting, I can say a service gifting also. I think that should frame it in the right way.
What service?
Service. Coming to service like say something like gifting a Starbucks coffee coupon. That's one thing. Let's leave it away. And then playing at some place like a golf. Okay, giving a coupon for that, or giving a coupon for playing at some amusement park, or gifting someone for some, say for hiring for a laundry.
But those are not, again, you have to distinguish between what's memorable and what's not memorable, and don't confuse the two. Starbucks, laundry, these are not memorable. You know, playing in a great golf course for somebody who's a golf aficionado, that is memorable. You know, going to an amusement park for somebody with kids, that's memorable. These are so you have to, if I understood what you're trying to do, you should focus only on the memorables and cut out all the, you know, sundry stuff.
Okay, got it.
Okay, that's primary feedback. If one, it's going to be a very small. Each person's network is going to be a very small network, because you don't spend that kind of money on random people. You spend it on your loved ones, really, your friends and family really close to you that you want to, you know, really celebrate and really acknowledge in a very meaningful way. That's going to cost money. Travel, for instance, you're not going to give gifts of travel, you know, whether it's hotel or spa or air tickets to random people. There may be 10 people in your life whom you're going to spend that kind of money on. So that's my observation, is that what you're talking about is has to have that kind of differentiated high-end feel to it, and exclusive, intimate feel to it, and that could be an interesting app.
Okay, true. Yeah, thanks, Raman. So just coming on this, how it works. So it's can you just move the previous slide once, in case if I have some time?
Go ahead.
2 slides more, please. It's just a pictorial representation of how my app would be working. Let's say in case it's a girl called Sarah has won a national Olympiad this year, and she updates this in the app saying that this won the national Olympiad. And then there's one guy called Rajiv, he's the uncle of Sarah. So he gets this feed on his app saying that Sarah has won the national Olympiad. Can you move to the next slide? So he comes to know that Sarah has won the national Olympiad, and he wants to appreciate her for what she has done. And he has a few options available in the app to gift her something. And he knows the attributes of what things interest Sarah. So he thought to give something, a place nearby to her, a bowling alley, where she can spend some good time with her friends. Can you move to the next slide?
Yeah. So again, as I said, you know, there are lots of things here, coffee and pizza, which you should cut out of this concert. Giving people concert tickets, that's a memorable thing. That's interesting. That's unique. That's differentiated, and that's expensive. Concert ticket is a lot more expensive than a cup of coffee. So think about those things. I think I've given you the feedback. You're going to need to basically design the whole experience and work with vendors and you know, where you're going to source the experiences and the coupons and the tickets and so forth from, based on that general you know, thought process that I kind of shared with you, and cut out all the commodity stuff.
Commodity stuff. Okay. So this is So
I think we are out of time.
Okay.
Do you have a question? Can you talk about specifically a question?
Yes.
If you have a question, I'll be happy.
Yeah, just one question for me. The question is that in case if we would like to tie up with the vendors, right? So how do we go on the pricing part with them?
You're going to, possibly the best way to do these partnerships would be with players that have affiliate models. Either you have to work directly with vendors and source stuff from them, like tickets and stuff. I imagine you can do affiliate partnerships with many of the ticket vendors. So that's your next thing to research actually, is that what are the tie-ins that already exist. If there are affiliate tie-ins, then you can just straight away pick up those experiences that give you affiliate fees, and that also immediately gives you a business model. Affiliates, there is 10 to 20% affiliate commission that people will pay you to sell their, sell their goods, whatever goods, experience, or service, whatever. Let's say concert tickets, to sell a concert ticket to one of your customers through the app, you get 15 to 20%, 10 to 20%, depending on what their affiliate program offers. So that gives you a business model as well immediately, and that business model is tried and true. The affiliate business model is tried and true, so you can launch your business fairly easily based on that.
Okay. Yep. Thanks for that. Just had a doubt on that.
Okay.
Yep.
Great. Thank you, Venkat. The next person presenting is Ganesan Murugan.
Yes, Shama, good morning.
Good morning. Where are you calling from?
Yes, Shama. I am from Coimbatore, calling from India.
Okay. India, all right.
Yeah, basically, me and my friend, Anil Komas, we together working on a concept called Global Village Currency System. Basically, you heard about Bitcoin. Behind the Bitcoin, the technology called blockchain. So the blockchain is a person from any part of the world can do a transaction with a 0% transaction fee or very little transaction fee. So how that system can be taken to the global market? So that system needs to be locally trustable, at the same time globally acceptable. That is our whole point of view. So how to take the blockchain technology into common man without changing any existing models. So what our model is, I can tell you how the outcome model will be there. If you take one village X, in the village X, a person agent creates a team of 30 people, and the 30 people information he bringing to the database. The database is a public database. So he broadcasts the information first. Then the 30 people's consumption information, like what is a rice, whatever the basic needs, up to $300. So Indian $300 is the maximum for survival. So according to the government itself. So that $300 information he broadcasts from the village. Second, from the same person, same 30%, he gathers one more information. What are the products and services they can do? Like what work they can do. Second, what is the product? Maybe in the garlic, there is a village, if you take garlic, it's a product production. So they can place same amount of $300 of product also. So one is $300 consumption information, that means I am going to incoming. And another $300 outgoing information. So both once placed. Then based on this placement, that agent broadcasts both the information and try to connect with the rest of the world who can take this garlic. For example, the garlic is the village is 30 people. They placed that $300 into 30. At the same time, they also $9,000 information for the garlic also placed. So someone can take a garlic and they can give the rice back to them. So it's already happening in the villages. In the garlic villages, the system is already happening. The people give the garlic and take the product in the local shops. So I want to take that into world level. Because the garlic is a different product. Because the garlic, once they cultivate it, they can keep it for 3 months' time. So your product can be sold in fair price once they able to which go through for a couple of days also, or even for a month time. So same thing we are applying here also. So now they have information for their consumption information. Example, one farmer places, I want 50 kg of rice, that is worth for 1,000 rupees. Same time he places 1,000 rupees worth for garlic also. Somebody can take the garlic and give the rice to him. So that is our base model.
Stop you. Hold on. You need to learn. This is a very complicated concept. For one thing, Bitcoin is an extremely complicated concept. What you're trying to do is an extremely complicated concept, and your pitch doesn't work. You're going to need to... Hold on, let me finish. You need to pitch things, first and foremost. Nobody is going to do anything with your product or your service or your concept unless you know how to, unless you learn how to explain it. So right now, you said, for the last 5 minutes, you've said a lot of things, most of which we didn't understand. Part of it is because you cannot, you cannot just talk about these things and expect that everybody will be on the same page with you, because you are talking about a flow of A, information, B, currency, C, products like garlic and so forth, and it's kind of like very difficult for us to grasp. So what I suggest to you is that there are, there are these animated explainer video kind of stuff or explainer slides.
Yeah.
Create something like that which explains the flow of what you're trying to say pictorially.
Okay.
Okay.
This is my outcome. Okay, yeah. Maybe I
have any conversation here. It's impossible for us to have any conversation here, or for anybody to have any conversation with you, unless you can explain specifically what is the flow of currency, information, whatever it is talking about. You're talking about all kinds of scenarios. And in 5 minutes, you have talked for 5 minutes, and you've said so much that you've lost us, basically.
No, I go into different model. There is the model which is I'm saying outcome. Very simple model, I will tell you. When you are using Facebook, you are creating $10 revenue for a Facebook. So, but if you come to WeDollar portal, if you are in a year, if you are creating $10 revenue for me, I will give you $8 to you. But that $8 I will give you as a crypto tokens. That tokens internationally it's acceptable. Internationally, the remittance people can trade for low cost remittance. That is our base model. What I told you is an outcome model. That is, if you now you can very simple. You are using a Facebook, you are not getting any benefit. $10 you are giving to the Facebook. So now I'm saying, if the WeDollar portal you are using, $10 revenue you are making to me, I will place the $8 as into the bank deposit. I will create a crypto tokens. Right now, the crypto tokens are globally not easily tradable. There's a lot of issues. Basically, nobody knows what is the exact.
Why would I want to use the WeDollar portal? I use Facebook because there are, all my friends are on Facebook. I have, I've spent the time for many years now, 10 years, to build up the Facebook presence, connections, and so forth. So why would I use
one more thing.
Don't talk over me, Ganesh. One of the protocols of working in a web conference is you don't talk over people. I'm not talking over you. I'm trying to give you questions and feedback. You need to wait till I finish and then answer. Otherwise, nobody can hear you. I can't hear you. Nobody in the audience can hear you. Okay, now go ahead and answer the question, why would I want to use WeDollar?
Now, if you are using WeDollar, if you are if your hometown in India, you want to send $100 as a remittance through any channel, banking or any kind of portal or something. If you are sending $100, you need to pay $5 as a remit fee. Very common thing in all over world. Up to $12 you need to pay. If there's a Kenyan, you need to pay $12. If you are Indian, so if you are sending for India, you need to pay $5. If you have a crypto tokens, then you can send it for near about $1 or less than $1. That's a revolutionary change.
Your primary value proposition, WeDollar, is transfer of money internationally. It's basically what Western Union does, but you're trying to do it without fees, which is the kind of the Bitcoin is trying, value proposition that Bitcoin is trying to do as well.
Yeah, definitely, 100% correct. But
so now what is the case of doing another equivalent of Bitcoin? Because there's already Bitcoin, which is having not such an easy time getting adopted. Why would it make sense to do another one of these?
Yeah, definitely. The Bitcoin is somebody in their system, they created 25 Bitcoins. They trade it for $5,000 giving to me or somebody, you or me. But WeDollar is you will create it one time up to $500, up to maximum 500 tokens you can create. The Bitcoin is created by somebody.
You are letting your users create tokens.
Yeah, correct. The tradable tokens which you will create from my system, and you can use it for local purpose or international purpose. But the trust, the WeDollar portal will try to give you for the intrinsic value for the 500 tokens. I will give you my system developed and give you the 500 tokens of the valuable things. This token can be, if someone comes to my system, creates 100 tokens. I will say this 100 tokens, slowly, steadily, I will give you the value for that one. I will take a response, my portal will take a responsibility for the tokens. If you are using Facebook, you are not getting anything. But if you come to my portal, you are creating 100 tokens, but this 100 tokens will help you for many things, not just for remittance purpose, micropayments, e-commerce, globally, you can trade for without using your local currency. You can use a local currency backup also. There's a lot of benefits. The problem with Bitcoin is it's created by somebody, it's like volatile, extreme volatile. It went to $1,000 and it went to $1 to $1,000 in a year time. But WeDollar is not like that. It's worth for 6 rupees, one crypto money forever.
So your currency is pegged to, your token is pegged to one of the currencies that you work in. So it's either pegged to the US dollars or pegged to the Indian rupees or whatever you're trying to do. You're saying that your currency doesn't have a fluctuating value. It is pegged to an international currency, a reserve currency.
It will peg to three-way in the currency. The tokens are connected to three things. One, a token, a local currency, plus there will be information. If I have a $1 token is available, you are creating, then it will connect it to some US dollar or something. There is a value proposition, plus $1 worth of information will be connected. That means it become an independent entity. That is the point in WeDollar. The WeDollar
hold on. It can only become an international entity if merchants start accepting it, and that's something, you're saying that you can use the currency, you can use these tokens to trade basically, but then that presupposes that all these tokens are going to be accepted by merchants on all over the world, and that's not a given. It's very, very difficult to achieve that kind of status.
No, it's
even
already
today,
there. Bitcoin is already accepted. No. If you take for one or 3 years later, you are using only mobile phone. The currency is going to be in the bank only. It's no more as a for public medium. Currency is going to be as like a token only. You are going to use mobile phone. Other mobile phone is going to use a mobile token. It's maybe a telecom based. It's backed by US currency or Indian currency or something. In India, people will use put the money in bank deposit bank, then they will get a mobile token. You put the money in US bank, you will get the mobile token. Both we are going to trade anyway. There is a third token can be tradable. There is a mobile token already, telecom token already there in the market. The Kenya already is completely in mobile token. The M-Pesa, it's contributing 50% of Kenya's GDP. Entirely is a mobile token only. But the M-Pesa tokens are not internationally tradable. The problem is it's connected to Kenyan currency. So if there is one more small thing, even small amount,
so that is one of the big issues, right? If you try to traverse international currency waters, that has implications. What you're talking about, the Kenya is actually very effective for their local trade, and Kenya is one of the countries, and some other African countries have done very well to have the mobile phones drive these currencies and tokens, and a lot of the banking is happening through the mobile phone in Kenya, and trade is happening. So the merchants in the Kenyan local economy accept the tokens that are issued by the mobile phone operators. So it's a closed system.
Right.
But international, it's not going to work in it. Those tokens are not going to be accepted internationally.
Fine. What you are saying is that the question mark already there.
your thesis will work if you're working on a local currency and in a local system. I'm not saying it's going to be easy, but it's this concept. If you take the Kenyan concept and apply it to, let's say, India, that may work, although India is a very, very highly regulated economy, and two, the mobile phone operators are the ones who are doing this. So they are the ones who have the clout to lobby Reserve Bank of India and all of the things to get the permissions to do stuff like this. You do not have the clout of the mobile phone operators. You're trying to do this outside of the mobile phone system, and you're trying to do it internationally, which gets you into a very different set of challenges.
Okay, one more thing. Now the same question is, I started the project with the same question only. The question you asked, same thing is my question: how to overcome such a very complicated thing. My idea is very simple. In the Kenya, a village already using the mobile token. A village already having 300 people, already they are using a mobile token for almost for 50% of their overall transaction. The 300 people creates a crypto token, each 10 tokens. Simply each 10 tokens they are creating. Mutualism, that's called mutualism basically. Mutually, the system creates 10 tokens for 300 people. That is equal to 3,000 tokens. This 3,000 token can be internationally tradable or not.
We are out of time to present. I'll tell you one last point is that building a virtual currency system is a very capital intensive process. So you're going to have to raise hundreds of millions of dollars or whatever equivalent in rupees to be able to build something like this. Bitcoin has been a very, very expensive process to build. So a lot of this has tremendous execution risk just because that you have to raise that level of financing to be able to make something like this happen. So you're going to need to convince investors who are willing to work with you and who buy into your vision and so forth. In 1Mby1M, we try to take out a lot of the financing risks. So anything that cannot be built with incremental, the ability to show incremental progress and either completely bootstrapped or bootstrapped up to the point that more money can come into the process and generally not hugely capital intensive. Those are kind of our guidelines to entrepreneurs. Currency systems do not fall within that framework. Currency systems cannot be built in a capital efficient manner. And we've seen that many, many times. People who have tried to build virtual currency systems have all had to raise huge amounts of money, and that is something that you're going to have to figure out how to do.
No, first I'm building the social media, then I'm going for a currency. That is my point. I'm going to bring the people for social broadcasting the information. Currency is my next step. We don't have a central information base for any kind of society in the world. That is the one major disadvantage. I don't know what is happening in India, what are the information is available in each villages. That is my point number one. I'm going to create a central database, then the currency.
Move to the next person. Thank you very much for your presentation. It's very interesting and very ambitious you're trying to do. I wish you all the best. We're going to need to move on.
Okay, thanks.
So now, speaking of Africa, we do have, let me see if I can say your name right, Olumuyiwa George from Lagos, Nigeria. Do you have a nickname or something that I can say more easily?
You can just call me George.
Okay, perfect. Thank you, George. Tell us what you're working on.
Okay, my name is Olumuyiwa George, and I'm calling from Lagos, Nigeria. So I wanted to tell you about my new venture, which is called My Lekki. So pretty fun facts about me. Lagos, the city I reside in, is referred to as My Lekki is at My Lekki. We have our motto is community, lifestyle, and yellow pages. Could we go to the next slide, please? Okay, at My Lekki, we believe every business should be online for customers to find and patronize them. And then having observed the trends in the Nigerian industry, I saw a need for a local hub where we can bring businesses and then bring the residents of these particular cities together, where they can do businesses, have fun, and then provide services that will support their lifestyle. So why we choose Lekki is it is an upscale suburb in Lagos, Nigeria, and then has an abundance of young people who are upwardly mobile, they're fun-loving, they love to enjoy life, and then they have an above-average spending power. And then there is a multitude of luxury businesses located within Lekki, and then there are high-net-worth individuals. So decided to bring a platform that would actually serve them, give them services that will support their lifestyle. The next slide, please. Okay, from our survey, I see that our audience, we have about 5 million people which we can serve. And then why I feel this venture is actually worthwhile is we have some venture-backed, that some investor-supported businesses like Supermart.ng, Jumia, which is owned by Rocket Internet, Konga, and Uber. And then their primary audience is this location where we're actually serving. So, and the distinct thing about this is these people are not direct competitors. They are not directly competing with us. So that means we have an edge. We study their strategy, and then we can actually do something really, really wonderful. Next slide, please.
So before we go to your strategy, let me see if we can understand as a group what you're trying to do. Now, if you look at the Western world, what is the closest equivalent of what you're trying to do? Is it a Yellow Pages listing kind of service? Is it Yelp? Is Yelp a good example, a good comparable to what you're doing, what you're trying to do in Lagos, Nigeria?
Yes, it's a Yellow Pages on the front end, but at the back end, we're actually going to be offering them digital marketing services. So we're actually trying to bring all these businesses online because they are offline, and then they just have a few customers that know about them. But if we put them on the web, that means different people are going to see them, different people are going to have a wider reach, and then the users to kind of also review these businesses if they have good service.
So you're doing an online business. That's the real business, and then you want to attach on top of that reviews and ratings. That's the summary of the business.
And then we're offering other services. We're going to have a dating platform where people can actually hook up. And then there's a forum too, because I've noticed users. I said there's a dating platform as well.
A dating platform.
So yes.
Okay,
yes.
This is where I would say be careful. If you go into too many businesses, maybe you can do dating platform later, but first and foremost, choose which one you want to do. If it's a question of building the Yellow Pages and you get people to list and you charge them a fee, that's the Yellow Pages business model. That's fine. Build that business, get enough penetration. Then you can get people to do reviews and ratings on top of that. That's the next level. And you can do dating afterwards, but don't try to do all of this at once, because each of those are, a lot of work, and you're going to have a limited amount of resources. You wouldn't be able to do all of them at once.
That's very true, and it's one of the challenges we've been facing so far, because we've not been able to support, we've not been able to push the different services which we offer. So it's just like you come on the platform and they
offer that services. That's the mistake you're making, is trying to offer too many things at once. Just do the online Yellow Pages business. If there are that many people in Lagos that are not listed anywhere online, just getting them online and charging them a fee, a listing fee, that should build you a business. And I would just focus on that.
Oh. Okay, that's an advice I'll stick to. So our strategy anyway for customer acquisition is putting relevant content that suits the audience lifestyle, and then promote this content through various advertising methods. And then we're going to do list building as well, do some good search engine optimization, and then PR. And then we advertise the different.
What you were saying, it looks like what you need to do in a geography, and I'm not hugely familiar with the geography that you're talking about, but my hunch is that there's a lot of small businesses essentially that are not really, what you're saying is they're not listed on the internet, so that means that you're going to need to call them and get them to list. So you need to run a call center, and you're going to basically have a group of people dialing and getting them online and getting them to pay. Otherwise, I'm not sure. So I'm not saying this as a final strategy. I'm just asking you questions on what is their level of online engagement. Where are these people? Are these people on the internet? Are these people interacting on the internet? Are these people accessible by the internet, or are you talking about people who are not online?
They are mostly online. The audience we are targeting at this moment, most of them are online through their mobile phones. And what they do is just read blogs and probably book flight tickets. So they don't know that, okay, they can as well be listed on the internet and reach more customers. So
figure out where in their activities can you actually touch them and give them the message that, hey, come and list your business with us on this online Yellow Pages site.
Okay. So I believe you're saying the strategy already.
Yeah.
So I'd like to ask, do you think this is really viable?
An online Yellow Pages business is viable. It has been viable, at least in Yellow Pages and online directories. These are viable businesses. They've been viable from the beginning of the internet, and of course, Africa is a less mature market as far as the internet is concerned.
Yeah.
The thing that is probably not viable is the $50,000 to $100,000 of financing. You're going to have to bootstrap this and show evidence that it's working, and the other thing is that the financing infrastructure in places like Africa is very weak. So to the extent that entrepreneurship is happening in Africa, it's happening very largely bootstrapped. There are some of these rocket internet projects, and there is a bit of investment there as well, but it's very small, and you're going to have to prove that your model is working before anybody will give you any money. So unfortunately, raising seed capital in those geographies are really very, very, very difficult, if not impossible to have.
But there's been investors that are actually repaying, like huge venture capitalists that came and invested in businesses in Nigeria, and then those businesses are really profitable right now. So I think,
so venture capitalists typically do not finance concepts. They finance businesses that have validation. That's the thing that you have to understand, is that it's really not viable to raise money on concepts from venture capitalists. Not anymore. It used to be, at least at one point. In about 1999, Silicon Valley, it was possible. Now it's no longer possible.
Okay. So what are you looking at? So what kind of investors?
What kind of investors? No investors. You're going to have to bootstrap it. You're going to have to use your own money or friends and family money, and largely you have to use customer money. So you better start getting customers who are paying so that you can start building revenues and build the business through revenues.
Okay. Well, you think this is sustainable, and we should just bootstrap so we can really scale and become profitable, a profit-making business?
I don't know. I don't know the numbers. I haven't run the numbers. But those kinds of decisions, I can help you make that. I will, if you hang on, I will explain to you how 1M1M works. And if you decide that you want to use 1M1M on how to learn, A, to validate your business opportunity, B, to build your business, we'll be happy to help you with that.
Okay, definitely.
You can hold your questions on that until I've finished talking about the model of how we work with entrepreneurs.
Okay.
Okay?
Okay. And thank
Thank you,
so
George.
much.
That's
a wonderful
let me
session.
take a few minutes. So, folks, I see that you're putting questions into the public chat. By all means, feel free to converse with one another in public chat. It's a great, platform to, great moment and great platform to network and exchange ideas and so forth with the community. I'm going to take 5 minutes and explain to you the 1M1M model, and then we can switch to Q&A. I'll take questions both from public chat as well as I'll give you back the phone number if you would like to dial in. All right. So now if you like what we are doing here in 1 million by 1 million, I would appreciate if you refer 1M1M to serious entrepreneurs. And the word serious is very important because, entrepreneurs who have unrealistic expectations about what it takes to build a business cannot build sustainable businesses. It takes many years of really hard work, incredible amounts of heavy lifting, and a lot of sacrifice, actually, to build a successful business, a sacrifice in the short term, and that or short or medium term even. And that, unless you have a realistic perspective about what those are, it's very difficult to, help entrepreneurs build businesses. But if you are that kind of a person, that kind of an entrepreneur who understands that there is a, huge amount of work involved and it's going to be many years journey, we will be there with you shoulder to shoulder for as long as you want to work with us. And we have many entrepreneurs who work with us for many years, and we are happy to help you through that process. So everything in terms of resources from 1M1M will be at 1mby1m.com. You will also find a very powerful, very inspiring, informative, and educational blog that is completely free of charge. That's on our website as well. The Entrepreneur Journeys book series, of which we have 12 volumes so far, including the latest $1 Billion Unicorns volume, are all available on Amazon Kindle, all over the world, actually. And then this is what our website looks like. It's a very information-rich, content-rich website. There are lots of videos. These roundtables happen every week. So this is our 259th roundtable. Next week's roundtable is the 260th. So please feel free to use these roundtables and definitely book your slot. Send in the slides to Maureen to book your slot because we are pretty overbooked on a regular basis nowadays. That's the link. The free public roundtables link is where you get to register to attend or to pitch. Then we have the 1M1M Premium Program, which is a $1,000 annual membership fee, and you get extensive methodology guidance. You get a very, very powerful curriculum where we have over 600 successful entrepreneurs sharing their stories, their journeys, their wisdom, what has worked, what has not worked, their advice, and we have stitched all that up into a very powerful curriculum that is delivered in video lectures and case studies. You can learn all of that in your own time, whenever you want to do that. So that's the asynchronous mode of learning that we offer. We also have private roundtables like these sessions, but they're closed-door, members-only sessions where we do the actual coaching. We also help you with our network, whether it's business development, financing, media relations, finding other advisors. We will help you with that as well. The $1 Million Club is a set of case studies you'll find on the homepage to learn, to see some case studies of people who have been in the program. Obviously, not everybody is on the website as a case study. Not all our members are. We also offer an ROI analysis of the 1M1M program. We offer you $375,000 plus 5 to 10% equity worth of value for just $1,000 annual membership fee, no equity. So you are very welcome to take, take that ROI equation, analyze it, think about it, and see whether you want to join the program or not. The program is not for everybody. The program works for people who are self-motivated, who are comfortable with online learning and, this whole virtual interaction. And we will give you lots of orientation material. You can look at the how to use 1M1M effectively link to learn. It's like a gym though, you know. Just by subscribing to a gym, you cannot be successful. You have to use the machines and lift the weights and do the, you know, Stairmaster, do the treadmill to get in shape. 1M1M is exactly the same way. We are like an entrepreneur gym. We'll give you lots of machines, but you're going to have to use them and do the workouts to get in shape as an entrepreneur. The 1M1M self-assessment is something you'll find on the website. It's a set of questions that you need to be asking yourselves as far as learning how to, you know, anticipating the kinds of questions other people, like investors, would be asking you. So that's something that you may really want to try to answer for your own benefit. So these are, you know, there's tons of information about the program on the site. You should go through all that and make your own decision on whether this program is for you or not. There are lots of video FAQs. And, you know, as I said, the curriculum is taught in case studies and video lectures. We've had over 600 entrepreneurs participate in the development of that curriculum, and we are constantly upgrading it. Every year we are adding probably 150 new case studies, new modules. Every month we upgrade the curriculum further. And the core curriculum consists of 7 modules: bootstrapping, positioning, market sizing, customer validation, financing, customer acquisition, and team building. Every entrepreneur needs to learn these topics and learn them well. You're going to have to deliver on each of these topics. And then on the electives, we have various different segments, so Web 3.0 and e-commerce, cloud computing and business solutions, mobile and social, healthcare IT, online education, building unicorn companies. We have a module for women entrepreneurs, so a variety of different topics, and those are the electives, but you have access to everything. All the electives are accessible through your premium membership. As I said earlier, our methodology is lean, capital-efficient, bootstrap startups. If you need a huge amount of capital out of the gate, that is not something that our methodology will support. And then, as I said, we do a lot of work in the media. We have a lot of clout in the media, and we'll help you access that clout and get your word out there. So whether it's social media, our blog, Twitter, Facebook, we have a huge LinkedIn following. You know, I'm a LinkedIn influencer, have 120,000 plus followers. So it's, you know, it's a robust, highly engaged platform with lots of people learning from this community. So you're very welcome to leverage that. The 1M1M affiliate program helps people in different communities who are trying to build their own entrepreneurship movement, and you're very welcome to partner with us. We have a generous affiliate program, and we also have an incubator in a box program. I'll tell you about that in a moment. Upcoming free roundtables are May 21st and 28th, and then I believe we have roundtables every week in June as well. In any case, Maureen will put up the entire schedule on the free public roundtable page on the website, and you will find the schedule there. Vision India 2020 is a book that I published a few years ago, and it's kind of an ideation book. You know, it's basically something that should trigger ideas in your head if you haven't yet come up with an idea, and it applies to actually all emerging markets. It's written about with the perspective of doing businesses either in India or leveraging India, catering to the global market, but many of the ideas will apply to Africa, to Eastern Europe, to Latin America, to Southeast Asia, all of those. And it's written as business fiction, as if we're sitting in 2020 and building these businesses. The 1M1M Incubator in a Box is something that our corporate partners use to run their corporate incubation programs, either intrapreneurship or community development as far as their developer ecosystems or geographical ecosystems are concerned. Happy to, again, if you represent a corporate entity, happy to talk to you about that. And once again, the latest entrepreneur journeys books are Billion Dollar Unicorns, Carnival in the Cloud, Bootstrapping with a Paycheck, and From E-Commerce to Web 3.0, How to Leverage the Evolution of the Internet. We are ready for Q&A. You can call in. You can also ask questions in the public chat. So let me go through. There seems to be a lot of activity in public chat today. Let me see what questions are coming. Ravi Balusu asks, could you elaborate the challenges on selling the services in India? Typically, the Indian market tends to be very value-oriented. Ravi, in general, it's very, very complicated to sell services or products, actually, in India because, you know, the sales cycles tend to be long. You know, it's Hi, I'm back. Sorry to, I pressed the wrong button and got dropped. I was answering Ravi's question earlier, and Maureen says that that message was for Amit Gupta. But in general, I'll just answer your question briefly. The sales cycles in India tend to be generally longer, much longer. So you have to build that into your, you know, product, your financial plans, your, you know, sales strategy or go-to-market strategy to, you know, to make sure that you don't go out of business while trying to navigate these lengthy sales cycles. So Abhilash, you were also asking a question of Amit. I think we could see that you guys are quite confident on the growth. If I'm right, initially you started with text message-based search company and jumped into mobile advertising. You know, Abhilash, if you're interested in studying the InMobi case study, there is a 7-part case study on Amit's, actually it's a conversation between me and Amit on their whole journey that's on our blog. You can look that up and get a lot more color on the InMobi story and how they navigated their journey. Abhilash, you have another question. I have a query. Who will be defining the value for each product? Oh, this is one of the presenters, and I think that's the question that you have got answers to already from Ganesan Murugan. So I'm going to basically ask you guys to either dial in and ask questions or to type in your questions at this point for me right now. So if you have questions that you want me to answer, please dial them into public chat. Make sure you send your chat to send to all participants. Sashi Valikat, I think you have a question there. Quick question. Before pitching the idea, what is the best model? Should someone pitch the idea in paper first or show a working prototype? Sashi, our philosophy is you should not write a line of code until you have validated the business and fully analyzed the business case. It's easy to do a little prototype if you're a programmer, but understanding the business potential, what are your what is the business model, what is the pricing model, what is the total available market, these things are critical, and spending 6 months, 9 months on building a prototype without doing that analysis is putting the cart before the horse, in our opinion. Syed, please go ahead and type in your question. Happy to answer if I can. Ganesan, your question is how to reduce rich and poor gap. My God, this is a question that I don't think belongs in this forum. That's a much bigger economic question, and it has the world today has incredible structural problems that are increasing inequality, not decreasing inequality. I'll be happy to, I'll be happy to discuss that topic, but I can't say I can answer that question necessarily. Manik Trehan is asking, when does one know that bootstrapping is aptly done? It depends on, on a variety of things. If you're starting to generate cash, you're starting to generate customers, revenues, profits without needing external financing, that means you're successfully bootstrapping. Syed is asking, I'm confident of the product I'm developing. If it's feasible in terms of its revenue streaming, will 1M1M help me find or fund? We will definitely help you learn how to validate whether a company, whether a product is going to be viable, commercially viable or not. Absolutely, we have very, very tried and true methodology for doing that. If that's the question, did I ask your question right? Did I understand your question? Sashi is asking, how is confidentiality maintained in the VC world? Nobody will, nobody will sign any NDA. Nobody will give you any guarantee of confidentiality. That's just how the VC world operates. Okay, so Syed, I've answered your question. Manik, does profits have to be visible during bootstrapping? Isn't it hard to break even during bootstrapping? It's very hard, but without profits, you will not be able to achieve any growth if you're bootstrapping, or there's no reason to do a business unless you get to profitability. So your goal should always be generating profits. Your goal needs to be generating profits. Your goal needs to be generating free cash flow so that you can do other things with it, including paying yourself and your team, both profit and revenue. Entrepreneurship equals customers, revenues, and profits. Everything else, financing, exit, valuation, all this stuff is optional. The core of entrepreneurship is customers, revenues, and profits. Okay, I'm going to introduce you to Irina Patterson. If you have questions about 1M1M, about the program, whether this program is right for you, if you have questions on how the program works, please feel free to email Irina at 1M1M.com. And the phone number is 786-301-2456, but she requests that you email her first so that she can schedule a time with you, and she will be able to answer many of your questions just through email. That's pretty much it. Sashi is, before getting to private coaching with your organization, is taking the 1,000 membership is the best way to get one-on-one answers. Other than the $1,000 premium membership, we have no other offering. So if you want to work with us, you have to pretty much join the 1M1M premium membership. There is no other way that we would be able to work with you. We have these free roundtables, and then we have the 1M1M premium membership. That's pretty much it. There's no other way we would be able to advise you. Companies like Flipkart have raised huge amounts of venture capital. So if you get to a point where you can prove that you have a very large market opportunity and you can build a fast growth business and you can convince investors to fund you, then you can run a red ink operation financed by outside investors for a while, and that will finance your growth.
So Manik, that is the thing that you cannot reconcile. If you're bootstrapping, if you do not have outside investors underwriting your red ink phase, your loss-making phase, you cannot afford to make losses. That's my point. If you're bootstrapping with your own money or with friends and family money, and you do not have outside investments, then you cannot afford to make a lot of losses. Syed, you may be very sure about your product, but unless you have a full investor pitch that is convincing, I cannot make any judgment call on whether your situation is fundable or not. If your situation is fundable, then we do help people get to investors, and that's part of the offering of the 1M1M program. But I cannot take your word to assume that you're fundable already. I need to look at your pitch. So you can pitch, if you haven't already, you can pitch at one of the public roundtables, one of these roundtables, and I'll be happy to dialogue further. Yes, if the pitch is ready, and based on your analysis, I deem your company fundable, then I will introduce you to investors, and I will guide you on that process. Syed, and whether it's next week or not, you have to work with Maureen. If you have registered to pitch and Maureen is working with, Maureen will try to work you in. I can't say if it's next week or not. We have a huge list of people, waiting list of people trying to pitch. So she will try to find you a slot. And if you're in a hurry, join the premium program. It's a $1,000 annual membership fee, and you will be able to immediately get guidance. The FaceTime with us is in similar format, roundtables, but they're private roundtables for premium members only, Sashi. You're asking, will the $1,000 program give FaceTime with my team in private? Private is in the private roundtable, same kind of format, but members only roundtables. Okay? Any other questions? You're very welcome. I hope you enjoyed this session today, and we look forward to working with all of you further, and I hope you'll keep coming back and use this forum not only to learn, but also get the emotional support and the community support that we provide. You know, you are not alone. We are all on this entrepreneurial journey. I am on an entrepreneurial journey. 1 million by 1 million is my entrepreneurial venture. It is my 4th venture, so I have had some experience already, but that doesn't mean it's easy. You know, all businesses are very difficult to build, and we are all traveling the same path that all entrepreneurs in the world travel. So this is a community to support you in that journey, to provide you with people who are traveling the same path as you and are traveling with you. So consider us your peers and compatriots, and we will do our best to help you through that process. Manik Trayan, you have another question. I am in the process, got revenue, but far from profit. Is profit something investors would consider at such an early stage? Profit is not a requirement for raising funding, Manik. Revenue, customer validation, these are much more important. Profit is not a necessity for raising funding. So again, Manik, I will be able to give you a lot more concrete feedback once I see your business plan and your pitch and so forth, so that you're, I'm giving you in context information as opposed to blanket kind of pie in the sky information. Okay, folks, are we more or less done with all your questions? Have I answered all your questions? Okay, well, we'll see you next week. Take care, and thank you for coming.